After wiping out the account 2-3 times, then I realized for a fact that okay, this is not how things has to be done. 5 out of 10 of my trades will be winning and 5 out of 10 will be losing. This is like a 50-50 probability. So how I manage the winning trades is what matters.
So what are the types of mindsets that usually exist amongst traders?
See, trading is a business. There is no business where you will only make profit. Profit, loss, risk, reward, everything is there. Somebody can ask me, can I trade with 10,000? The answer is still yes. But the question is, can effective risk management be done in 10,000? The answer is no.
Someone's capital is 1 lakh or even 10,000 for that matter. How do they analyze the risk reward ratio?
If you're a beginner starting with 10,000 or 20,000, focus on developing a system, not on making big profits. So we should understand what we are doing wrong and correct our mistakes. And that is actually how things have changed.
In the previous episode, we figured out how a beginner should actually approach trading. However, the stock market's volatility and unpredictability significantly impacts a trader's mindset. So much so that we often hear stories of people making 40,000 profit in a day, but losing 1 lakh just the next day. That's why in today's episode, we are going to decode the mindset a trader should carry while working in the stock market. And to throw some light on this, we called upon Hariprasad K, a SEBI registered expert who not only started trading at the age of 18, but also waited tables, delivered medicines, and made websites, all of this while becoming the pro that he is today in trading. We hope that you enjoy this episode and don't forget to subscribe to GapUp. Besides this podcast, GapUp also provides a free Telegram channel where you get free tips from our SEBI registered experts. You can find the link to our Telegram channel in the description. Hello sir, welcome to the podcast. If you could just give us a brief introduction about yourself and tell us how exactly your trading journey started, what got you inclined towards trading, and a little bit about that please.
Yeah, so my name is Hari and I'm a SEBI registered research analyst. So the reason I got started in the markets is definitely for the fact of money, because stock markets is particular is an industry that is actually projected to be coming with lots of money.
Yes.
So every time I used to search for the term stocks or stock markets, it was always associated with respect to luxury life. So I felt, okay, this could be an easy way to make money. I was starting off. I was at the age of 18 when I started off in the markets.
Okay.
So I felt that this could be actually a very easy way to make money, and that is what pulled me into the markets. But later on I realized, okay, this is not how it seems. It's not easy to make money anywhere. Let it be in the markets or anywhere outside also. It's very tough to make money. So it was, in fact, those fancy cars or bikes that actually pulled me into markets.
Okay, so who introduced you to the stock market rather?
So it is not any specific person that introduced me to the markets, but every single day, if you watch news, I used to watch news from an early age, but if you're someone who's actually watching news, then on a daily basis, we hear about what is happening to Nifty, what is happening to Sensex.
Correct.
And at times we hear news that, okay, Sensex has crashed by 500 points. But we really don't know what is this. So what we know about the exchange of BSE is that big building that everybody looks staring at, correct?
Yes.
So that actually generated curiosity. So that is one another fact that I got attracted towards market, to understand what these terms mean and what does it mean by market crashing by so and so points.
You have founded LiveLong Wealth, right? So can you tell us a little bit about the history of LiveLong?
So first I started off, my company is 8 years old right now. And our company was registered with the name LiveLong Technologies Private Limited. So at first, trading or stock markets, I was actually doing along with another startup that was in the healthcare domain of mine. So we were into developing softwares for hospitals, clinics. So parallelly, I have done a lot of website development, all different kind of development projects. I'm coming from the mechanical engineering background, but I had a keen interest towards coding and programming. So then over time, I was also doing trading parallelly. They reached a point where I realized, okay, my keen interest is actually on the financial markets and not on this healthcare domain. So then we completely pivoted into the financial markets. And this understanding about coding definitely was an advantage. Why? Because all the trades that we do are purely based on data.
Correct.
So I knew for a fact when I started off in the markets that markets is very tough. Initially, okay, I was also overconfident. I wiped out my accounts. Now with time, I understood, okay, this is not the way how you should approach market. And decision making is the toughest part when it kind of comes to stock markets. So if you have a method where you can actually just analyze the last 10 years of data and figure out for yourself how something could happen at a later point in time, based on how it has happened in the past.
Correct.
So we were analyzing prehistoric data and we were trying to forecast what could actually happen in the future based on what has happened in the past. So I shifted my trading completely rule based after like around 1.5 years of trading manually. And that is actually when I started seeing the difference. So I also worked for a proprietary trading firm called Futures First, which was definitely a game changer in my life, because till then I was of the assumption that trading is more about accuracy. But once I started working for this proprietary trading firm, over there, almost all the traders were just winning just lesser than 50% of the times. So right now, our focus is actually not on predictions, but on responding.
Okay.
So we don't care whether the markets are going to go up or down. Our focus is actually on how we are going to respond and the intensity with which we are going to respond.
So how did you change this entire trend of yours in terms of going from forecasting to,
Good. That's a good question. And the answer to that question is, it's about losing money. So I was losing money whenever I was trying to predict the market. So then I understood, okay, there is no point in predicting. See, now also like being an RA, when I kind of interact with 5 or 10 people, they'll ask, where will market go tomorrow? Or where will market go next week?
Okay.
So nobody on earth for a fact can say with 100% confidence that market is going to go up or down, because markets are not at all rational. And we know for a fact that 95% of the people in the markets, they just lose money. And it is hardly 5% of the people who are making money. True. So if markets was so easy to predict, then everybody would be making money. So now the thing over here is it's not about predicting, rather it is actually about managing the risk. So right now, or like after the second year of my trading, my focus has not actually been on much on strategies, but rather it has always been on risk management.
Okay.
That is, if I'm taking trades, if things are going against me, how am I going to survive long in the game? And this is one of the mistakes that even me as a beginner has made. That is, when we come into the markets, our focus is only on identifying one particular strategy or on identifying one particular advisory that is going to give you advice that is always going to make you money. So we have that particular thought. Okay, some people they also ask us, you are SEBI registered, but how did my stop loss hit? So being SEBI registered or being a good trader doesn't mean that you're not going to have a losing trade.
Yes, and not make mistakes at all.
Exactly. So everybody makes mistakes. Everybody will have losing trades. It's actually about how you manage the risk in the losing trades and how you kind of actually plan to ride the trends in the winning trades. So I can also share my verified P&L, and you can actually just see for yourself how the winning trades is different from the losing trades in terms of the absolute amount. So you would see for a fact that when the trades are winning, the reward would be actually like 2 times or 3 times the risk that we usually take. Okay. So that is standardized. So we have standardized a process where our risk is always set, and the reward that we look for is actually going to be 2x or 3x of the risk that we take.
All right. So that's quite interesting. I think we'll dig a little deeper into
sure, why not?
Into the technical aspects and the trading mindset of people that they should carry forward. But I think I want to know a little more about your journey to begin with. Right. So from what you mentioned, I think you're an engineer turned trader. Right. So tell us a little more about that and how that entire journey turned out.
I'll just tell you. So I studied in VAT Vellore. Okay. Now the best part about VAT Vellore is that you have a credit system. That is not like fixed class hours. You can actually select your teachers. You can also select your class timings.
Okay.
So what I used to do is I never used to take the morning hours. I used to go for sessions only after 2:30.
Okay.
So all my classes or all my sessions were like 2:30 or 3 to 7.
Post market
hours. So I used to schedule my classes in such a way that my classes are actually post-market hours, so that morning though I can actually focus on the markets, in the evening I could go for the sessions.
Nice.
So every single day I could actually just watch the markets, I could learn. And those were actually my learning days. Initially, it took me around 2.5 years to break even, to understand what works for me. So that I was able to use that time fruitfully. And I finished my engineering in 3.5 years. So I was taking extra credits. You can actually take extra credits and you can complete your engineering degree beforehand.
Okay.
So the last year I kind of had only my final year project left. So I had good relations with the faculty that I used to come to colleges only on weekend.
Okay.
To finish my project.
When the markets are closed.
When the markets are closed. And during the weekdays I was working for Futures First in Bangalore.
Okay.
So that I got the same pre-placement offer through an off-campus interview. So I started working with them as an intern even before I completed my college. Parallelly, I was doing my final year project also. So I used to travel up and down from Vellore to Bangalore on weekends.
Quite a hustler.
Yeah. So weekdays I used to work here in Futures First,
Mm-hmm.
and weekends I used to go back to college and complete my project. And it was not this much traffic was also not there that time.
Mm-hmm.
So I used to travel up and down.
Okay, that's quite interesting.
Yeah. So now the best part I got is like by the time I completed college, I had like 1 year work experience. Because trading is an industry where you ask like why from engineering to trading or why from engineering to the financial markets.
Mm-hmm.
So I just wanted to tell you, engineers are very good at problem solving.
Mm-hmm.
So and I know for a fact all the people who were working in that prop desk, almost 90% of them were engineers only.
Okay. Was it started off by an engineer? Futures First?
I don't think, because he's a real estate guy. The difference is that here though we have a market timing 9:15 a.m. to 3:30 p.m. So that is like that market is almost 24 hours, 22 hours round the clock.
Okay.
So it opens like early morning, 4 a.m. and it closes late night 2. And in between you have the pre-open market, all those things. You consider to be 23 hours.
Mm-hmm.
So round the clock it runs. So now once again, since that was a 12-hour job, 1 p.m. to 1 a.m.
Mm-hmm.
So even though I was actually participating in the European market, I still got some time to look at Indian also.
Because from 9 a.m. to 12 p.m.
9 a.m. to 12 p.m. still. So I was not like actively trading in Indian, but I still had enough time because you can keep a track of it.
So what was the first stock that you traded in when you came,
First
when you started with the
to be
Indian
specific,
market?
I think it was ICICI Bank. So
Okay.
I started trading, the first broker that I traded with was RKSV Securities,
Okay.
which is now known as Upstocks. Then Upstocks was RKSV Securities.
Mm-hmm.
So that is the broker that I started trading off with. And that point in time, I still remember like the leverage that we used to get was like 40x, 30x, 40x.
Mm-hmm.
That is, if you have just 1,000 rupee, you can trade worth 30,000 rupee. That is like highly leveraged.
Correct.
So I took too much exposure. So if 1% move against you means you lose 30% of your capital if you're trading on full leverage. So I lost. I wiped out my account like thrice.
So how much amount did you initially start off with?
Initially, I started with like 16,000 rupee.
Okay.
I lost it all. Then again, I remember like one particular day, I put in my pocket money, little bit money I made. See, obviously, trading is one particular field where everybody gets too much fancied about. So I just wanted to say this is just like any other job or any other business, not something so fancy like people think. So I was doing trading and it looks cool. So one thing about trading is trading actually looks so cool because charts, you see the money, MTM.
People fancy it.
Yeah, people
quite
fancy
a
it a lot. And because in movies also this is actually projected in such a fancy way.
Yeah,
So,
like all the, like Wolf of Wall Street.
Yeah, Wolf of Wall Street and
And
some
all
Hindi
those are
movies that I
fancy.
forgot the name, Hrithik Roshan comes and...
Zindagi Na Milegi Dobara.
yeah. So it is actually like projected in a way it looks so fancy. So I was doing something on my mobile and my roommates also saw this and they're like, please do it for me. And you make 100 rupees profit and you feel that you have cracked the market.
Yes.
So I was at that age, I was like 18 and a half. I felt, okay, I have cracked the market because I made 100 rupee profit. So then my roommates are like, please take my money, please do it for me. So I also, like, then they kind of actually just gave me some capital of theirs that I wiped out.
Oh,
So-
what was their reaction to it?
Obviously, they felt like they kind of felt like against you because that is an age when everybody thinks about getting rich quick.
Yeah.
Right. So they also came in, they also wiped. So that was like, I think altogether I lost around 25-30K that time.
Okay.
But that was a big amount that time. Okay, it's not small.
Yeah, of course.
It's like
Yeah.
now because this is our pocket money, this is like the money that our parents give or our grandparents give like that. After wiping out the account 2-3 times, then I realized for a fact that okay, this is not how things has to be done.
Mhm.
See, because we are humans, especially we are Indians. So we have this particular attitude that we are not ready to accept our failures or mistakes.
Yes.
Because we are not used to losing, no? But that is not how it goes. In trading, when we speak about trading, if you take 10 trades, for me as an individual, if it is directional trading, if I take 10 trades, 5 out of 10 of my trades would be winning and 5 out of 10 would be losing. This is like a 50-50 probability.
Okay.
So how I manage the winning trades is what matters. So that mindset I also used to have, that arrogance that I can't be wrong and market is wrong.
Mm-hmm.
So then over time, I realized, okay, this is not how it works. I had to be humble. I should respect the market. Market is always superior. So we should understand what we are doing wrong and correct our mistakes. And that is actually how things have changed.
Right. You mentioned mindset. So I wanted to understand, considering the entire topic about the podcast is traders' mindset, right?
Yeah.
So what are the types of mindsets that usually exist amongst traders? Like,
Okay.
I've heard about the aggressive type, the
Yeah.
passive type. So what are the kinds of traders
so
that exist?
talking about mindset, I would kind of actually like to say person to person, the mindset varies.
Mm-hmm.
Okay. So for example, something that actually works for me in the markets needn't necessarily work for you. Or needn't necessarily work for him also, because each one of us are separate individuals with separate personalities. So it is very important for us to understand what is more comfortable, right? So even though, like, let's speak about driving a car. So the basic rules are the same, but the way how each one of us drive the same car would be different.
It's different.
So we have to try it out and we have to figure out what is comfortable for us. We see in the markets people who come, they come with aggressive mindset, and people who kind of come with a conservative mindset. And it also depends on the tune of capital they have and the experience they have and the age group they belong to. I'll simply tell you, I don't like dealing with clients who are like very young. I'm not generalizing it, but majority of the people who are lesser than 23 or 25, a starting stage where they start earning something, they have very unrealistic expectations, like doubling their capital or tripling their capital in 1 month or 1 year. Whereas someone who's actually above 35, they're mentally mature enough to understand what is realistic and what is unrealistic. And they would actually stick with the rules and regulations much more better than someone who's just coming in. It's like how somebody rides a bike when he just gets a license.
Yes.
He'll be doing all rash driving, then one accident he knows for a fact his life is more valuable than anything else. That life is our trading capital.
Makes sense, I think.
So even how much of a lecture, so now maybe there could be somebody who's watching this video and he'll be like, what crap is this guy saying? Only once we burn our own hands or once we burn our own fingers, we
realize it. So what category do you put yourself under?
Right now, so my approach has completely changed. Okay, so I'll kind of just tell you, right now, my this thing that I'm handling is like around 35 crores.
Okay.
So now obviously the way how I traded when I had 10 lakhs or 25 lakhs or 1 crore is different from how I trade 35 crores. So as the capital increases, you think about more conservative and think about being more consistent.
Okay.
So right now my focus is actually on consistency than generating, like taking high risk and all. Like we focus like very nominal risk. So if we make money also, we make lesser profits. If we make loss also, we take lower profits. So how I trade is, on any particular trade that I take a risk of 0.5% of my capital, and I try to make 0.75 to 1% or maybe 2% if things are in my favor. But on the downside, if the trade is going against me, on a single trade, I only risk just 0.5% of my capital on a single trade.
Got it.
Also, I have set a hard stop loss, that is on any specific day, I'm taking a loss of 2% of my capital, I'll stop trading. I won't trade for that day.
Okay, and how many trades do you usually take in a day?
Depends. It usually varies between 10 to 15 or 20.
Okay, got it. And do you have any lucky day or favorite day as such to trade?
Okay, so when it kind of comes to trading, like right now, majority of my positions, that is almost 80% of the positions that I take are positional trades, not intraday. That is like the positions we start building from Friday and we have the positions running till the next Thursday.
Got it, okay.
Now, there is nothing specific like a lucky day, but when it kind of comes to the MTM figures, obviously the maximum profits we usually see on the expiry days. That is what is general. But these days, some sort of a trending moves are coming on Mondays and all. After a gap up or gap down, we get some trending moves where we get some good, decent gains. But nothing like specifically saying this is a good day or that is a bad day. So as I mentioned to you, like it's all about responding to the markets right now, and like we are at peace with wherever the market is going. We just focus on making sure that our risk is always in check, and if things are in our favor, we try to hold it as much as possible.
And do you have any specific keys that you use to identify a particular stock while trading?
Yeah. So when it kind of comes to stocks, we look at some parameters like long built up. So we usually select stocks based on open interest.
Okay.
We trade stocks only from the Nifty 100 universe for now. And in these particular stocks in the Nifty 100 universe, we look at stocks that is actually showing some bullish momentum and are in a phase of long build up. So we look out for setups where we can actually catch a breakout move of a stock that is in a long build up, provided that the risk reward ratio is in favor of at least 1:2. So if at all I want to go for a buy, so for example, one recent entry we took was SEBI India. If we want to go for a buy, we make sure that the risk in terms of the pricing of the stock is not more than 5%. Because generally when an all-time high or 52-week high level is getting broken, we expect to catch like a 5 to 10% or even more than that move. So the risk should be max to max 5%. So the reward can be more than 5%.
Alright, could you elaborate on more of the analyzing of the risk reward ratio, considering, let's say someone's capital is 1 lakh or even 10,000 for that matter. How do they analyze the risk reward ratio?
Okay. See, trading with 1 lakh, risk management won't be so smooth, to be very honest. If somebody has 1 lakh, still I can give you something. So 1 lakh, let's divide it into 5 parts. 20,000, 20,000, into 5, 20,000 into 5, let's divide 1 lakh. Now, let's kind of actually look at stocks that are showing momentum. So, when I say momentum, let's look at stocks that is either approaching its 52-week high level or that is approaching its all-time high level. And let's see if these stocks are in a phase of long build-up. So, long build-up is nothing else but an open interest concept where the stock price is increasing, and along with the stock price increasing, the open interest is also rising. And we also figure out if the volume is also spiking along with these two things happening. Now, at these breakout levels, we'll mark the swing levels in daily time frame. We'll actually mark the swing levels in daily time frame. We'll identify the swing high and swing low levels. So once the swing high level is getting broken, we go for an entry based on a breakout with our stop loss at the swing low. Also, if the price of the stock is 100 rupee, we make sure that the swing low is max to max at 95. And not at 90. Because if the stop loss comes at 90, then the risk is like 10%.
Yeah, it increases.
Yeah. So now if a breakout is happening for a stock that is breaking a 52-week high or all-time high level, generally, if you backtest prehistoric data, whenever a 52-week high level or an all-time high level is getting broken on a stock that is in a phase of long build-up, it is not so tough to catch a 5% move or more than that. So we can easily expect a 5 to 10% move on a stock that is in a long build-up that is breaking its 52-week high level or all-time high level. So we screen for these stocks. So when these parameters are satisfied, we enter into these stocks by allocating just 20 or max to max 25% of the capital in a single swing. And this process keeps repeated over and over again. Our exit is not defined. That is, stop loss is defined, but exit would be only once we see a change of character, something that is forming higher high, higher low. If it starts forming lower low and lower high, we come out. Till then, we hold on to the trend. See, trading is a business. There is no business where you will only make profit. Profit, loss, risk, reward, everything is there. What we should do is we should look for opportunities where risk is low and reward is much higher than that. So, in everything. So, and as a trader or in personal life or professional life, I always look into this. So, I look what are the risks that I'm taking with something. So, for example, I'm asking Ria to jump from the top of this building and I give you 10 crores. It doesn't make sense for you because if you jump from the top of this building,
there's no point of the 10 crores.
Yeah, there's no point of the 10 crores. But if this is like, if right now we are actually at the 4th floor. Now on our 1st floor office, if I jump, it's not so high. And if I'm giving you 10 crores for jumping from the 1st floor, max to max you could break a ball. That also like not so likely.
I mean, quite likely.
Okay, quite likely. But it's worth 10 crores. Maybe you just have to take rest for 3 months. Maybe you just hit a hairline fracture, but 10 crores you. So, everything, I'm just giving you an example. So, everything that you look at in the markets, I look at from the perspective of the risk and the reward. Only if it is worth it, I enter into it. And this is also one mistake I used to do as a beginner. I used to enter into a trade and then I used to think where my exit would be. That is, first we jump into the trade, expecting the price to move.
So, do you now expect the exit first? Do you look at the exit
of course.
first?
So, see. That's what I said. For every trade that I enter into, my loss is capped. I know for a fact, if this trade goes against me, the max to max loss I'm going to incur is going to be 0.5% of the capital, not more than that.
Got it.
So I enter into a trade knowing for a fact if this goes against me, I'm losing 0.5%. So my mind is at peace. So once I enter into the setup, then I look for the next setup where I can actually just once again take the same risk and then look for a reward that is much more than the risk. So if I had 10 trades and out of 10 trades, let's say 9 trades are giving me a risk reward of 1:2 or 1:1. Whereas one trading opportunity is there where I'm able to get 1:2. I'll opt only for that one trade where I get a 1:2. I'll eliminate all the other 9 trades. I won't even trade that. Even though opportunities are there, I won't trade that. I'll focus only on that one opportunity where I get a 1:2. So selecting trades itself is a task because the number of trades that you get with quality risk reward is less.
Yeah, makes sense. So, is this how you usually your go-to strategy for avoiding losses?
Avoiding losses is not possible, but to have probability in your favor, our risk management should be right and risk reward should be the best.
And what are your strategies for risk management usually?
So, for risk management, as I mentioned to you, I follow a bunch of. I always tell this concept of correlation. So, I'll help you understand the concept of correlation better with an example. So, let's say right now we are kind of in a winter season. Correct. So, in a winter season, like let's say I'm a businessman and I have an ice cream shop. So, in a winter season, it's going to be a nightmare for me. Why? Because there will be less demand for my ice creams. But what if I also have a popcorn shop? So, during the winter season, maybe my popcorn shop will generate decent revenue. And during the summer season, my ice cream business will generate decent revenue.
Yeah.
So, it'll balance out each other. So, with respect to trading, right now we are following like 13 strategies that are non-correlated to each other. That means one strategy making money has no relation to the other strategy making profit or loss. So, this is called as correlation.
Okay.
So all the strategies that we follow are not at all correlated to each other. That is, all are independent strategies, or you can consider them to be independent businesses.
Okay.
And for every strategy that I do, once again, as I mentioned to you, the risk per trade is defined to this 0.5% of capital.
Can you list down the 13 strategies if you
To
can?
be very honest, I can this thing, but there is no specific name we have given. I can tell you the logics. So we have strategies that is majority of the strategies that we still follow are based on option selling. So we have some strategies that actually does straddles. Okay, that keeps doing straddles depending on where the market is moving. Something we refer to as rolling straddles. So let's say right now if Nifty is at 100, it does a straddle at 100. If it moves to 105, it rolls the straddle or shifts the straddles to 105. And then there is another strategy that is triangles. It identifies a range within which the market stays. Till the market breaks the range, it will continue holding the position as a triangle. And once the range breaks, it converts a triangle into a naked side sell.
Okay.
That is, let's say we are starting with a call and put sell, and the market is actually breaking on the upside. Then the call leg that we have sold will be exited and will continue holding only onto the put sold. So that put sold will make us money. Probably the call sold will take some loss, but if it continues moving up, it will make money. Then we have something that we refer to as multi-time frame straddles. There will have multiple straddles that will be executed in the market at different intervals of time with wide and narrow stop losses both. So narrow stop loss trades will actually take care of the trending moves, whereas the wide stop losses would actually take care of the volatile moves. Then we have actually systems that works on crude oil that is based on VWAP pivots. We have systems that works on Bank Nifty based on the same logic. We have systems that actually works in Nifty that is based on VWAP alone.
Okay.
Mean reversion. So a bunch of strategies like that. So it is more or less on the option selling front. But right now, to be very honest, the strategy that is actually making more money to us are on the option buying side, because the premiums are so cheap and the moves are also kind of actually crazy. So it's from the last 2 to 3 months, even though our systems are more on the option selling side, what is generating us profit is more on the option buying side.
So how did you shortlist these 13 strategies?
Okay.
Like on what basis?
So when I have, let me give you an example. Let's say I'm having two strategies with me, strategy A and strategy B. Strategy A is capable of generating me 30% returns annually with a downside of 10%. That is what we refer to as drawdown. Whereas strategy B is capable of generating me 40% return with a downside of the same 10%. So this is what we refer to as CAR by MDD. CAR by MDD ratio. This is one of the parameters I'm telling you. CAR by MDD ratio. So with the first strategy, 30% return I can generate by taking a downside of 10%. Where the strategy B can generate me 40% return by taking a downside of 10%. So which would I choose? I'll go for strategy B. This is just one of the parameters I have mentioned. So now there could be a scenario where this strategy B that is generating 40% return by taking 10% downside makes you money only 2 out of 10 trades that you take. Maybe 10 times you trade, 8 times you're losing money, only 2 times you're making profit.
Right.
So only if you're psychologically that strong, you can stick with strategy B. Because out of 10 trades, 8 times you're losing money.
It only twice.
At the end of the day, at the end of the year, strategy we will make you more money, more returns with same drawdown.
Correct.
Now strategy A, as I mentioned you, 30% return annually with 10% downside. But in strategy A, maybe 5 out of 10 trades should be right.
Okay.
And only 5 out of 10 will be losing. Whereas in strategy B, 8 out of 10 will be losing and only 2 out of 10 will be winning.
Yes.
So too many parameters are there that we can look into. But one of the aspects is CAR by MDT.
CAR by MDT is what you mentioned. Okay.
That is one of the aspects. And probability of success, what we refer to as POP, probability of profit. Then there is another factor called as expectancy. There are multiple factors. So that's what I said. So person to person, it will be different. So now when we are designing strategies also, we actually design it in a way that strategies are non-correlated with each other. And it should have the least correlation with each other. So that's why we have 13 systems that we follow that are independent of each other. They work like independent businesses.
So do you think diversification is important when it comes to trading?
Yeah, of course. So on a smaller capital, to be very honest, there is less room for... See, now somebody can ask me, can I trade with 1 lakh? The answer is yes. Somebody can ask me, can I trade with 10,000? The answer is still yes. But the question is, can effective risk management be done in 10,000? The answer is no.
No.
For efficient risk management, I personally would say you need at least 5 lakhs.
Okay.
Only then we can actually manage the risk efficiently. We can have multiple systems that we run so that the risk is diversified across systems. Else though you can trade, but your risk management can't be so efficient.
So, let's say someone's, just started trading, or someone's, who's employed, right?
Yeah.
They don't have so much time to look at the market on a very, very regular basis, let's say from 9 to 3:30 or 3, right? So, what do you recommend for them? How do they go about it? Should they go with, trading on a regular basis, or should they go ahead with equity, or what would you recommend for them?
So that is basically a very interesting question. So, to any particular person who comes out to me, I would say, even if you don't have time, you don't have time to sleep also, but you please spend 5 minutes and invest in the markets.
Okay.
Investing or swing trades or positional trades, so everybody can do. Because right now our markets are on a bull run. Everything is actually looking bullish. So there is nothing wrong in you actually investing or taking like some swing trades or positional trades that you can do. You can keep aside 5 minutes. Everybody can do. So there was a time when smoking and drinking was considered to be cool.
Yeah.
So in a similar way, right now trading is something that is considered to be a status symbol or something cool. So people should not pursue this as a hobby. They should come into it only if they're serious about it. So if you badly want to do something, you will obviously find time. So I told you like I was working 1 p.m. To 1 a.m. shift in the European markets. Still I was managing to trade the Indian markets by waking up early. So when you badly want to do something, you'll find time for it.
Yeah, makes sense.
So that's the thing. So if only if you're serious, please come into it.
But a lot of like traders that we hear about, right? They want to trade, but then somehow they are stuck in the corporate loop where they have to give time to their job as well, right?
Yeah.
But still they want to learn about trading. So I think that's the niche that we're talking about.
Yeah, exactly.
Really want to learn about it. What is your recommendation for them?
With respect to learning about the market, see right now, like as compared to earlier, right now we have a lot of sources to learn about trading. Okay, so it is actually the question is about finding the right source or the right medium. So earlier we seriously didn't know whom to learn from or where to learn from, and the biggest danger in the markets is somebody could be a good teacher but he could not be a good trader. You get what I'm trying to say? Maybe there is a person A who's very good at teaching, but he himself is making loss in the markets.
Yeah.
So the question is about finding a blend of a good teacher as well as a good trader. And you need to verify for yourself whether this person who's actually teaching you, if he himself making money from the markets.
This reminds me that you were SEBI registered even before the whole hype of SEBI registered, being SEBI registered came in. So what got you into that
I'm
entire
actually
line?
the youngest SEBI registered RA, like when I took it 2 years back. So the thing is pretty simple. It is actually the question of authenticity.
Right.
And it is actually about, I need to prove myself. So it is always good that you have a degree. So maybe, what do you say? Your mom is actually the best doctor in taking care of you, in taking care of your illness. But if your mom is also having the doctorate degree, not the doctorate degree, the doctor thing, she has done her MBBS, then that actually adds more value, right? So it's not a question about does your mom know to take care of you. Definitely your mom knows to take care of you. But that authenticity or credibility actually comes by her doing the MBBS.
Right.
Same thing. So I actually wanted to make sure that, because every Tom, Dick and Harry is speaking about markets. So now obviously if I have a SEBI license, that actually adds more credibility to whatever I'm speaking. And I seriously don't want to stand amongst the crowd. I always wanted to position myself a step ahead of what other people are doing. So I always had that mindset. So that's the reason that I applied for a SEBI license at a very young age.
What were your side hustles when you were working towards? I know that internship was there.
I have worked in Baskin Robbins.
Okay.
I have worked waiting tables. I have done medicine delivery. Then I have done website development. Then the big money I made was through data scraping.
And these are in the span of how many years?
2 years, 2.5 years.
Okay, interesting.
Data scraping brought me the big money. Data scraping means that was actually the time when Digital India thing was happening. So everybody wanted website. So what I did is we made a template for website. Only thing that changes is the principal, chairman's logo, color scheme. But the content is almost the same. No, every school will have the same content.
Correct.
So the images we used to change, we used to host it, and we used to charge 5,000 rupees per website. I sold more than 200 websites.
And these were for schools?
Schools, colleges also. Because everybody wanted to have an online presence. And they wanted, and that time everybody else was charging high, so I was charging very cheap. just
Okay,
5,000 rupees. So
okay,
that helped me build capital. Then apart from that, that was the time when e-commerce boom was coming. So I told you I had the medicine thing, no? So I also had an online pharmacy called LLment.
Okay.
So for having the medicine database, the cost of the database was around 2 lakh rupees
Okay.
to purchase the database. So there are almost 4 lakh medicines all together in India. Cost of the database was nearly 2 lakh rupees. I didn't have 2 lakh to pay. So what I did is, me and my roommates, I took all my roommates' laptops, 4-5 laptops, and we scraped the data. So I collected the data, scrape the data, you see, data scraping you call. So you can actually write down Python codes, web scraper codes.
Okay.
So automatically you'll click and extract the data from every page. I did this for around 1 week and I extracted this full data that was costing 2 lakh rupees.
Wow, that's really cool.
And then I put it up on Quora. So there were many people asking where to buy medicine database. Even I have asked this question on Quora. And I saw that there are hundreds of people asking this particular question because everybody wanted to start an online pharmacy. Every pharmacist actually wanted to go online. But this data was costing 2 lakh. So for every single person who asked this question, I put a comment. I got this database, mail me at this. That's my first Quora thing that I had done, is still there.
How much
I
were
was
you
selling this
charging
for
each
20K.
person? Wow.
What everybody was selling
2
for,
lakh to
first
20K.
people was selling
And
for
that's
2 lakh, I sold for 20K.
That's a solid deal.
And I sold this to almost, I think, nearly 100 people.
Wow, so you made the money like this.
So I made nearly 20 lakhs from
Yeah,
that.
exactly. That's
And this was at the age of like 20.
That's some big brain moments that you had back then. That's some solid thing.
So whenever somebody kind of comes and tells me, so is my Instagram, right? Right now also my Instagram, like I'm not saying that I did this in the past. There are pictures of me working in Baskin Robbins in the past in my Insta. There are pictures of me like kind of waiting tables or like doing food. Oh, that is still there. If you just scroll through the past, it's not like I came out of nowhere. So 2015, you see the images, these things are still there. So when somebody tells me this excuse, I also have done this. So now the opportunity people have is like much more than what I got that time. And still if people complain and I don't have capital, that's just an excuse.
So what's the mindset that you wake up with every morning before you start?
So the mindset, if you kind of actually ask, is pretty simple. Like, I just want to be better than what I was the previous day. And to be very honest, I have never ever compared myself to somebody else.
So what is your suggestion to all those budding traders out there?
Budding traders out there, the thing is, I learned it the hard way. That when I started out in the markets, my expectation was to make 20% this thing, like 20% returns per day. That was my expectation.
Okay.
Then once I started losing money, then I realized for a fact that 20% per day is not possible.
So, of course, it's not a switch, right? That one day you're just unrealistic expectations you're having and then you go back to having realistic
That's what I said. I burned my hands. I lost money. So from 20%, my expectation came to 10% per day. Then it came to 1% per day. Then it kind of came to protecting capital. So then right now my expectation is to make hardly 1 to 3% per month or 2 to 3% per month. That is what I look for. If I get more than that, I'm very happy. But I want to protect my downside. So right now my focus is majorly on risk management, as I said. It is actually always on protecting the downside.
Okay, you also said protecting capital, right? So a lot of them end up losing their capital in the market just when they're entering. So what is your one suggestion for people to sustain in the market for a long time?
Yeah.
Because a lot of people face this issue where they lose out on their entire capital and then they come and like...
Exactly. So see, I'll tell you, like right now also I interact with people who say that I wiped out my capital.
Yes.
So I asked them, how much was your capital? They say 20,000. I have also done the same mistake, okay? So 20,000 is their capital. Then I asked him, how many trades did you wipe out? They say 2 trades. That means in per trade, he was taking a risk of 50% of his capital. That is 2 trades went against him, he wiped out. The risk per trade should always be set. So right now, I'm risking only 0.5% of my capital per trade. So if I had 10 back-to-back losing trades also, I end up losing only 5% of my capital.
Yeah.
Whereas somebody who's trading with a smaller capital, when they're having just 2 losing trades, with just 2 losing trades, they're ending up losing their entire capital. That is, they're taking a risk of 50% of the capital. So the question is actually about how much loss can you afford to take. So that's the reason I told you with lower capital, risk management is not so efficient. So with 5 lakh rupees, maybe 2% of capital is 10k.
But 5 lakh rupees again for all those, who are trying to learn.
Exactly,
that's quite an amount for
Riya.
them.
This is what I actually wanted to speak. Okay. At first, we should focus on learning. So please don't think. See, there are many fake stories on social media where there are stories said about converting 10,000 to 1 billion or making 1 crore rupees with 10,000 rupees. I can put a YouTube video, how to systematically grow your capital from 10 lakhs to 1 crore in 10 years. Or I could put a video, how to grow 1 lakh rupee to 1 crore in 1 year. Everybody will click 1 crore to 1 lakh to 1 crore. Why? Because people are in the greed.
Yes.
And the people who watch these kind of video are the people who are going to start money or who has never ever made money in their life.
Yeah.
There's someone who has sense in his brain or someone who has already made money, he knows what is realistic. But for a fresher who's starting off, he doesn't know what is realistic. So he thinks that 10,000 can be made to 1 crore in a year by trading.
Correct.
So he'll jump into that.
Yeah.
So as a fresher or as a newbie, your focus should be on identifying a system or identifying a trading style that is suitable for you, that matches your mindset without much headache, you can systematically follow. So if you're a beginner starting with 10,000 or 20,000, focus on developing a system, not on making big profits. Once you have the system in place, if you don't know a way to make money, come to me. I'll tell you 101 ways to make money. See, right now the problem is I don't have time. But I know for a fact there are 101 ways. There are much more means to make money than what was there earlier.
Correct. I think even in your story, there were a lot of, like from what we heard up until now, right? There were a lot of, okay, I started from scratch, from zero, right? I also want to hear a little bit about the losses or the negative part of it, because of course it's a part of trading, I think.
So now one point I just wanted to mention out to you guys is, see, I had done all these things. I have like kind of worked for Baskin Robbins, like work for my friends' restaurant, all these things. But I just wanted to make it a point. It's not because of the fact that I didn't get support from my family. My family is like really well to do and they're like always supporting. But I actually wanted to like try my hands on these things and I needed to do this for myself. And I didn't want to take a cushion or I didn't want to take a support from somewhere. I wanted to explore it by myself. That was the thing. So I just wanted to make that point. It's not like, so obviously family support is very important. True. So that is definitely needed.
Got it. All right. Interesting. All right. Just another question with regard to losses. It's a little technical, but in terms of avoiding losses, I know you mentioned that there is nothing like having no loss at all in the market, right? But in order to avoid losses, a little bit on the technical end, which one's better, averaging or would it be pyramiding or what would it be?
So basically this averaging and pyramiding concept is based on who is doing it. So let's say someone who is already well versed with what he is doing, is making money, and he is kind of pretty sure about the market continuing to move up again. Him averaging makes sense. Whereas on the other hand side, let's say that you're someone who is already making loss. It's actually about, the question is like asking, let's say someone who's a good businessman. He's taking loan to expand his business. He's bringing in more funds. That's fine, his business will scale. Because he's scaling with lesser capital. With more capital coming in also, he'll continue to scale. Whereas on the other hand side, if a businessman who is already making loss, he has this thought and more capital comes in, many people have that thought. They'll be making loss. Why are they making loss? They won't say that. They'll say that they're making loss because they don't have capital. They say that, okay, this capital will come. I'll sell this land and bring that to business. My business will boom. But the problem is, it's not about capital. It's because they don't have a system.
Yes.
So same thing applies to averaging. So if you know what you're doing and you know for a fact from here the price could bounce up, averaging makes sense. But let's say you seriously don't know what you're doing. Price is coming down. You think that averaging will actually make the price move up. You'll make more loss.
Yeah, true.
So the question is about who does it. So I personally don't average because that's not my cup of tea. So as I mentioned to you, everybody has their own comfort zones in trading. So I don't consider that to be fine with me because I stick with fixed risk. So at the time of entry itself, my risk is defined. So if I average, my exposure in the trade increases. So
that's the 0.5% that you mentioned.
So my exposure in that same trade actually increases. So I don't want that. So rather than me averaging that particular trade, I would any day prefer taking another trade with the same risk.
So how many trades do you think that people should usually take in a day?
So it actually depends. Okay, so it's actually about the quality of trades or the quantity of trades.
Okay.
So right now, majority of the trades that I take are rule based. That is not manually taken. So these are actually taken based on some rules or systems.
Okay.
So it is automated. If you're someone, so maybe Ria is a person who can actually focus for 1 hour. So I, as an individual, I know for a fact that my focus period is 30 minutes. So if I'm sitting in the opening market hours, you will be able to focus for the first 1 hour and capture the first 5 trades. Whereas I, as an individual, maybe I can capture only the first 2 trades. Maybe I can capture the next 2 trades also, but my focus or my attention level would not be so high that my quality of trading would drop. And this quality of trading would actually improve over time. So number of trades that you should take is not the question.
Very subjective is what you're saying.
The quality of trades is what you should focus on.
Fair. I think that's a perfect end to our podcast. Thank you so much once again. I think that's really nice. Thank you so much. Thank you for watching this episode till the very end. Please do let us know who you want to watch in the next episode. Also, don't forget to ask your questions in the comment section down below. We'll make sure that you get your answers in the next episode. Share this episode with your fellow traders and subscribe to Gap Up, and see you in the next episode.